All this profit is the fuel, the engine that is pushing out these insanely high levels of common stock repurchases, share buybacks. Not quite at 100 billion, which would be insane, but 95.846 billion in share buybacks in a single year would make this by far the largest share buyback I have personally ever heard of. And it's not even close, and they've been doing very high levels like this year after year after year. I want to send some appreciation to one of our Sage Seeds that requested we look at Apple's 2024 season together. This is the kickoff of a brand new season. The color this year will be orange. Keep an eye out for an increasing number of orange thumbnails as the 2024 season reports are filed, uploaded to the SEC.gov website, and consumed for your entertainment by yours truly. There's two things about Apple that I think are different than every single other tech company. And really these two things can sort of be collapsed into one. Let me show you what I mean.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
Note 11 to the financial statements, share-based compensation. The tech industry is riddled with this sort of stuff. The basic idea being a significant portion of employee salaries, tech employee salaries generally, is in restricted stock units, which do vest over a certain number of years. It gives employees plenty of incentive to not shop around and go to other tech companies. There are definitely videos explaining exactly that all over YouTube. Let me know in the comments if you want me to find some and link them below. We're going to ignore every row except for the years, 2021, 2022, and so on. And these gray rows, RSUs granted, 91 million in 2021. That decreased to 88 something, then decreased again to 80.4. Scrolling down a little bit, if you look at just the dollar amount of share-based compensation, the absolute dollar amount of RSUs at fair value is higher than the last year, and last year is higher than 2 years ago. But when we just looked at the actual number of shares, starting at 91 million a couple years ago and dropping by a couple million every year, the number of actual shares issued, that puts into context that this increasing share-based compensation expense is actually increasing significantly slower than the actual share price. So what looks like an increasing stock-based compensation is actually a decreasing share-based compensation. Apple is, according to the number of RSUs it's actually granting, literally reducing its stock-based compensation. And I'm here to tell you that that is very much the opposite of what most tech companies are doing. Meta is raising it, Google is raising it, Nvidia definitely raising it. Hell, even Intel is raising it if I'm not mistaken. But Apple is not raising it. That's point one that I would like to present in the latest season. Then here comes point two. Note 4, financial instruments. We're about to look at a big long table that shows the cash equivalents, but most importantly, the marketable securities that Apple holds. In previous seasons of this 10K, I've been unable to analyze Apple without pointing out that it has become one of the largest US-based banks in history. And when I call it a bank, I mean literally it does the things that banks do more than it does what tech companies do. In fact, there's several things that I'm not sure would be allowed to continue if it were regulated like the other banks are. $27 billion held in cash versus $132 billion held in financial instruments, an investment portfolio. As of right now, unrealized losses are actually in the $4.6 billion range. Not absolutely terrible, but that is a unrealized loss of about 3 to 4 percentage points. But before we even get into that, let's just step back a second. I just told you Apple has 132 billion in marketable securities. According to MX.com, they maintain and update daily a ranking of the biggest banks by asset size in the United States. Well, according to this, Apple's 132 billion in assets would place it as the 29th largest bank in the US, right between Discover Bank at position 28 and USAA Federal Savings Bank. This one table, just a note to the financial statements, in my opinion reveals that Apple has secretly become one of the top 30 banks in the US. And this is point two. Apple secretly is a huge bank, or has become one in the last decade or so, something that I personally believe is an extremely underrated fact about Apple's financial statements. Well, combining this with point one, Apple is reducing the stock-based compensation that it pays while every other tech company is not reducing, is increasing, frankly. I think these two things explain each other and are two of the biggest trends I can digest from the 2024 season 10K. As Apple continues to have more and more of its day-to-day be around managing a huge portfolio of securities and bonds, well, this is starting to have effects on the organization. Legal proceedings. On March of the current year, in the US, 2 formal non-compliance investigations were created against Apple under the Digital Markets Act. Investigation 1. How is Apple allowing developers on the Apple App Store to communicate and promote offers directly to end users? So for example, if an Apple app wants to have a Black Friday, Cyber Monday sale, well, do developers of apps have the same ability to have those sales when they publish on the Apple App Store as they would in other app stores? The second investigation relates to the default settings, the uninstallation of apps, and the web browser choice screen on iOS. 3 months after these investigations began, the Commission announced in preliminary findings that Apple's app stores are in breach of the Digital Markets Act, at the same time opening a third formal investigation against the company with respect to the updated 2024 contracts that Apple requires its third-party app developers to sign before they're able to upload to the app marketplace. Right now, the Commission is saying that the first 2 investigations can be used as supporting evidence for this third investigation. And this third investigation could lead to a fine of up to 10% of Apple's annual worldwide net sales. Now, that is very much the upper limit of the threat. Apple believes that it already complies with the Digital Markets Act. Apple used to basically leave it at this. These latest investigations, the ones that just happened in this last 2024 season, have, for the first time that I'm aware of, caused Apple to add, and Apple continues to make changes to its compliance plan in response to feedback and engagement with the Commission. So whatever this investigators are digging up in this latest round of investigations seem to finally be causing Apple to engage with their feedback, is the nice way to say it. Because it's worded like this, it does seem like Apple's strategy this time is not to pay these fines. They're not going to make it get to the point where they have to pay these fines. They're going to avoid those fines by actually potentially changing up some of their services ecosystem. It is nowhere near this simple, but if you're the head management of Apple, this is not the right time to be adding to your tech headcount, to be buying expensive tech salaries, to be attracting expensive tech talent that requires lots of share-based compensation. I am sure that if Apple wants to, it can start to attract very, very aggressively, very quickly. But doing so while there's ongoing investigations that you're actually going to change fundamentally the economics of your services ecosystem, that is not the right time to be aggressive in recruitment. Some people might disagree, but I'll leave it up to you guys to decide whether Tim Cook is thinking about this in connection to their recruitment strategy and actually toning back the share-based compensation, not just because the business is a giant bank, but because the part of the business that hasn't turned into a giant bank yet is also being investigated so thoroughly that they might actually need to wait to see what they're going to have to look like according to regulators. But as you're trying to empathize with Mr. Tim Cookie, let me also share that that was just the first of a long list of legal proceedings. There's an equally serious Department of Justice lawsuit that just started in the same month, but probably the second one that I'm most interested in is the Epic Games lawsuit. As a fan of typically more open source leaning software, I'm quite curious if this lawsuit is able to do something, because what Epic Games has essentially done, and this is a massive simplification, there's definitely videos covering it in more detail, but the summary, the context, if you will, is that Epic Games has essentially refused to follow any of Apple's requirements for uploading to the App Store, yet has essentially siphoned Apple's APIs in order to force their app to work on iOS operating system, even without being on the App Store. Now that takes a good amount of technical skill, definitely takes a tech company like Epic Games to be able to even attempt it. You know, most app developers are not going to be doing all the bootlegging that is required in order to cause this sort of protest to happen. But Epic Games does have the know-how, does have the skill and the resources to keep this up to date, and is keeping it up to date, which fundamentally violates Apple's contractual requirements. So Apple immediately is in a situation to sue Epic Games. But of course, that's what Epic Games wanted in the first place. Epic Games getting this lawsuit to be a countersuit for the contractual breach that they created and is actually filing in California, Apple's home turf, if you can believe it, invoking California's unfair competition law. Now, the fact that they're countersuing is, as far as I understand, the reason that they can make this such a big deal and actually call it unfair competition. If Epic had just sued Apple and that was it, they wouldn't be able to call it unfair competition. They would have to say, we don't like the contract, blah, 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 and that would have been a much weaker lawsuit. Instead, they purposely devoted tech knowledge into breaking their contract with Apple, which automatically caused Apple to sue them. Now they can say that that lawsuit that Apple has against them is an instance of unfair competition. Small difference, but the consequences of this being a competition law is that Epic has the ability, and is sticking to this, the ability to ask for a full injunction, which enjoins the company from prohibiting developers from including in their app any external links that direct customers to purchasing mechanisms other than Apple in-app purchasing. Many, many, many words that say that if this lawsuit swings in Epic's favor, Apple might not be able to play middleman for transactions on App Store apps at all. And so you have the Digital Markets Act on one side, but that's from the regulator top down. Bottom up, one of the actual big developers in the market is also attacking Apple from the opposite direction. Apple is being flanked on both sides when it comes to its App Store. And so I ask you again, if you're upper management in Apple, does this seem like the right time to be hiring tech talent to develop your Apple ecosystem? Maybe that's the whole explanation of why share-based compensation is actually decreasing while the rest of the tech industry is doing tech things, ballooning their share-based compensation all over the place. However, I had dug one layer even deeper for you guys. Epic Games is a company, not publicly listed. It's a private company, so no looking at the 10K for this one. It is 41.4% owned by its founder, Tim Sweeney, but many people might be surprised to see China, Hollywood, Japan, and Denmark represented in the rest of the ownership structure. Is Epic more open source? Yes, but it's also big business. If you look up to these products, they've created Unreal Engine, Bing Video, as well as Fortnite, making over $6 billion of revenue according to Wiki. It's big business. And so Apple, representing really this Silicon Valley gatekeeping, is fighting a battle for all Silicon Valley companies in a very real, tangible way. If a few months or years from now, the App Store is actually broken down, if Apple does have to democratize the App Store on its devices, well, that would not be a true democratization. It would be opening the window for other countries and other industries to begin finding ways to charge you money as you use your Apple devices. And this is the fight that Apple is presenting as its rebuffal. Apple charges money. Yes, it makes money off the App Store, but it makes money the same way a bodyguard would make money. And so this will be debated in court. For those of you that like earnings per share, here are the diluted earnings per share for 2024, 2023, 2022, and all very stable around $6 and some change. To call Apple a mature business cycle company is an understatement. Apple is very mature. It is the granddaddy of all these current high-flying tech stocks. And unfortunately, much like real life, this granddaddy is being underappreciated by its grandchildren. Some of the grandchildren kicking and screaming, throwing fits. But every single year, there are more and more tech companies of a new generation pointing at Apple, saying, why does granddaddy get so much privilege? Tell granddaddy to share. I don't know if that's fair, but it really isn't the first time that Apple has had targets on its back. In fact, I'm pretty sure you could say Apple, more than most companies, has had targets on its back, and it has crushed things so far. If you like the Apple ecosystem, make sure to appreciate the time you have left with it. Changes are a-coming.
It's been really fun to work with the Sage Seeds artificial intelligence output to make this video. Please like and subscribe.
That's a more fit.